Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that kind of pump and then dump, just kind of sideways action on the Bitcoin chart, as we did fail to close over 27,000 guys. So again, we still are just underneath this head and shoulders over here, which basically has a measured move down to $23,000. And if we just remove this kind of a falling wedge price action over here and just solely focus on the head and shoulders, you can see that we've got the kind of shoulder structure there. It was a delayed breakdown. We did get that breakdown. We're kind of having a delayed retest, right? And so the bearish perspective on this chart is that we're just bearishly retesting it and that there's the potential to break back down. And then that's going to be the final straw. And in fact, we might even put in another head and shoulders here if we do tag back down to this kind of baseline here on the wedge. And so we'll have a big head and shoulders, and then we'll have a little head and shoulders, more or less with the same measured move. If I do grab the height of that head there, yep, the same. Look at that. It's going to bring you right down to $23,000, this little head and shoulders, if we do end up having a breakdown here. Now, again, guys, it's just it's just a lot more possible that we can have this breakdown because we weren't able to flip $27,000, and that has been my line in the sand for probably a couple months now, and we're just not able to do it, Alpha Fam. So again, we haven't lost the midline of this wedge, right? So if you get kind of a through line here through a kind of a mid channel, you can see we have some liquidity there. We didn't do the drop that I thought that we were going to have in a last episode, but we did have kind of a split. We had kind of like two heads on the beast last night, which is that we had an hourly chart to the upside and we had a 6-hour chart that was implying to the downside. Now, the hourly chart is what ended up playing out, so we did actually tag. We finished tagging the top of this wedge, but then as soon as we tagged it, you can see we just started to fall back down. So again, it's almost like this wedge just wanted to tag the top, right? And then it's like, well, I'm done with it now. Well, if that's the case, then now it's free to come all the way back down, right? And that could create a new neckline where if we put in a shoulder after that, we could have the measured move down to 23,000. So again, guys, we just haven't really done anything. The BlackRock ETF, it's not real, guys. It's just like a rumor. They applied for it. Everyone say, they're going to get it. Well, we don't know. We don't know what's on the mind of the SEC. We don't know what's going on behind the scenes in Congress and in the administration. We just don't know how the government is going to treat these crypto assets and whether or not they're going to come out fighting, even against BlackRock, or if they are going to just cave in, and if political donations are just going to go left and right, and that BlackRock, just as it does with so many things, just gets its way. Now, BlackRock is in a lot more financial trouble these days than it has been in the past. It's made a lot of bad decisions over the last few years, and so it's not as scary as it used to be. And so I think if there was any time that the government might want to challenge the power of these guys in BlackRock, I mean, it could be the case that they're going to challenge it. Also, there's just a lot of uncertainty going on in the market about how overheated it is, whether the Fed is going to increase rates next month, which it might, and just take it all with a grain of salt. Ideally, we don't break down from the middle of this wedge. We come back up to retest the top a second time and then end up flipping it critically above 26,500 and hold it this time, and then also above 27,000 securely, just to break this neckline and just invalidate this breakdown. And then maybe from there, we can get on top of this shoulder over here and have a measured move to the upside, perhaps $30,000 or so. Okay, guys. Yeah, I mean, this is what I'm looking at. Obviously, there's still that liquidity to the downside, and the 6 hour, we can do an update on that, but just wanted to refresh you with what's going on and just let you know, like this head and shoulders formation, okay, it's just bearishly retested. It hasn't been invalidated yet. And similarly, okay, this falling wedge, right? This bullish falling wedge hasn't been validated yet with the breakout either. Okay, so both of these patterns could fail. You know, both of them could play out, and it just there's a higher statistical likelihood that both of them play out, because these two patterns have pretty good probabilities behind them. There's a lot of patterns that have weak probabilities, but head and shoulders and falling wedges, they tend to have one of the higher statistical likelihoods. And so that's why I'm just kind of harping over it all of these months, because we can forecast it, right? Like if you're an experienced trader with patterns, then you can forecast it. And so we might as well do that. If we don't know what's actually going to happen tomorrow, we might as well draw these lines in the sand and just have some idea of how it could play out. Now, what I have drawn out on the screen is just if they play out in succession, okay? So the only way that this could play out in succession, well, the falling wedge really could not play out first. It would invalidate the head and shoulders. So the only way that these could both play out is if the head and shoulders hits 23,000 first. Okay, and then it's just like a flash wick back into the falling wedge. We just play around there on the edge, on the breakout, and then we go for the measured move, and then continue or die, whatever. Whatever happens up here happens. But anyway, that's the order of operations that I would be looking at. Now, we were breaking down when that BlackRock news came out. And so there's an open question in my mind as to whether or not we were going to see that head and shoulders play out. But the BlackRock news was just so bullish that maybe this entire move was negated. Now, I don't really understand why BlackRock news would negate market makers pushing the chart down to grab liquidity, okay? Because the liquidity is still there, all right? Maybe the excitement of the news delayed it, right? But the liquidity is still there. So if I was a market maker and I wanted to if I wanted to just destroy these stop losses, and I wanted to fill in this fair value gap for whatever reasons, of profitability, getting some rocket fuel to go to the upside, or just tanking this market so that BlackRock can get great prices when its ETF comes online, and people join up and buy Bitcoin through the BlackRock ETF because BlackRock sinks this chart down. Okay, just I'm just thinking, I'm just playing devil's advocate and thinking, why would this chart go down even though it's looking kind of bullish right there for the last day or so, and on that BlackRock news? Well, everyone's getting really excited about BlackRock, and it's just making me feel a little bit wary. Why didn't we invalidate the head and shoulders? Why didn't we break above 27,000 and get bullishly on top of the wedge? we haven't done anything bullish yet. We're just sitting here under 26,500. And I told you, the line in the sand is 26,500 at the end of the week, and that preferably above 27,000. And to be honest, guys, on some time frames, we need 28,000. So if this is so bullish, why aren't we pushing up? Why haven't, over the last few days, why haven't we broken these key resistances? And the only thing that I can think of is that just a little bit conspiratorial is that maybe the market, maybe BlackRock is so powerful it's going to push the chart down and we're going to make those new lows, or test our lows again, right, in that kind of $16,000 $17,000 area, right, maybe 18,000. Just so that BlackRock's customers can get in on it. So maybe we spend like a month or two heading greater to the downside, maybe even dramatically low numbers, and maybe even that $10,000 level that so many people were looking at. BlackRock gets somehow approved for their ETF. Maybe by then it's like 1 or 2 months later, right? So they're approved. Now they're kind of onboarding people. Anyway, the first wave, right, is getting in on it. It's the bottom of the market, and then BlackRock's ETF just has a positive reputation for the rest of the market as it's going to be up only from there, right? So that's a little bit conspiratorial there, but the other idea is just that, well, there's free liquidity down here. Okay, so even without BlackRock, even without the other issues that we could think about, just from a market making perspective, there's a fair value gaps over here, fair value gaps over here, lots of stop losses, on our way up, and just a flash down to trigger all of that stuff would be just to collect all that money for the exchanges, basically, and then take off in the charts. Okay, and do we need to go lower than that? No. I mean, we could make a lower low and just make a bullish divergence and pump off of that. So that is possible, right? But, do we need to do that? No, because a double bottom is just as bullish and a higher low is also just as bullish. So there's lots of choices here. And, if the market itself is just too bullish to push down because it would just be too expensive to push it all the way down, then you have the pattern traders with you. You have the pattern traders on your side because they're still seeing the head and shoulders and their measured move is still down to 23. And this is going to, and everyone's going to stay bullish above basically this area up here. And so they're just going to think, well, we were trading this area. This was a little bit of a fake out to the downside. This was a little bit of fake out to the upside, fake out to the upside. We broke out, and then we're just retesting the breakout of this kind of zone here, and now it's time to go. So again, like, that kind of 22 to $23,000, it's just a good area. It's just a good area to kind of, grab some liquidity and go, maybe even freak people out just a little bit before you do so. Now, we could say, that's, not a very well drawn zone. Okay. And that's fair because that's true. You can see that we had this wick over here, we had this top of the wick over there, we had this top of the wick, and then where did we come down to? Right to that line. I mean, if you really want to talk about a zone, that was kind of our zone, and this was just some type of like a bottom area, right? If you think about the rule of three or whatever. And so in this case, we played with the zone, faked people out, the whales accumulated, we pushed up back into this zone, broke out, and then we just came back and retested. And so now is the time to push up. That's the bullish scenario, guys. Okay, that's the very bullish scenario, and that this head and shoulders here is just a fake out, just a total fake out, and that in fact it's the falling wedge that we need to pay attention to. And again, but for me, it's going to be 26,500 holding on top of that, and then 27,000 is really the line in the sand. And I'm just not even going to care unless we're above 27,000. I'm just going to be looking for downside as long as we're under 27,000. Okay, so that's just my perspective. I really don't care if we go up or down, okay? But because it's going to be good for me either way. But I don't know. These are my theories of the market. And of course, I have a theory for both ways because, I'm not a perma bear and I'm not a perma bull. I'm just trying to be a clever little alpha monkey, right? And our goal here is just to put food on our table. It's not to hodl coins. It's not to be loyal to these coins. The coins are not going to be loyal to you guys. So don't be loyal to your coins. If we do need to, cut them to preserve our capital, then absolutely I will cut them in a second, right? As soon as it makes sense to cut them, I will cut them, and then I'll just buy back lower, right? It's the policy that you have to have. And also, if they pump, right, and it's a pretty sizable pump, then I'm going to take profit. I'm going to sell. I'm not going to hold them until the end of time. I want to sell them, right? I want to always be selling and actually be able to live my life with money as opposed to, holding on to some abstraction of coins. So again, don't get addicted to this stuff. If you're trading a favorite coin that it's kind of like your hobby or something, or you almost think of it like a pet, by now you've traded it so much. Maybe it's time to switch to another coin, okay? So that you're not so loyal to it and so that you don't have emotions attached to it, right? If you just really like a coin, just you should like selling it, okay? That's what you should like about the coin. You should like selling it. You shouldn't like just holding it because most of this stuff is scams, okay? Not a lot of it's not, but most of it is, okay, guys? So just be careful. And even the stuff that's not scams, a lot of it will just go belly up because they're just not profitable, okay? They just don't have a good real world model and they just can't support the dev teams, keeping it up to date, right? So that it doesn't get hacked and all that stuff. So this is just the reality that we're in. We're still in the early days and still kind of Wild West territory. Now, let's go ahead and just take a look at the Bollinger Bands again without the wedge on because we can just get kind of an interesting idea here. As you can see on the weekly, we are still holding on to that possibility of breaking back above the Bollinger Bands. The problem is that the Bollinger Bands rose while our price is rising on this first day of the week. And so we weren't able to get back on top of it. We've literally just bent it up over us. And so again, like unless we're above 26,500, above 27,000, I'm just not going to believe that we've flipped this thing around yet. Okay, and we haven't. If we stay like this, we're just getting embedded under the Bollinger Bands. And the last time that we did that, right, it didn't work out too well for us. Okay, see this? Did not work out too well for us. See this right here? Did not work. We had a chance. It did not work out too well for us. Okay. See this right here? Okay, we had a chance, but it did not work out too well for us. Same thing here. Same thing here. Okay. We want to be on top of these Bollinger Bands on the weekly. Guys, that's our goal. So when I say 26,500 is important, I hope you understand why. When I say 27,000 and we refer to those head and shoulders, I hope you understand why I'm saying those levels. When we look at the falling wedge and where would be the price that we break out at, I hope you understand 27,000, okay? And then on a momentum basis, it's a little bit more abstract, but just for safety in our volatility, we really need to be above 28,000. Okay, 28 to 29,000, that zone can still be a fake out. So even 29,000 would be strongly preferable, but that's asking a bit much at 26.4. Okay, so I'm just being very realistic with you guys. Okay, we need to get above the Bollinger Band, we need to get above 27, and then we need to get above 28 and 29, and then pretty much we're going to be safe. There is a chance that we could double top, but there are going to be some pretty interesting plays that would be possible to perhaps the 40s and even as high as 50, guys. So Yeah, it's possible, but we're just not there yet. We're just watching this, and then the 2 week also closed, and the 2 week didn't really have the same threshold here. The 2 week still implies that we could fall down. It's not like the Bollinger Bands just like popped up to our price action. So you know these will try to intersect, and perhaps that's something that could lift us up, sort of like over here. But for now, I'm just going to assume that on a Bollinger Bands basis, we're operating on the weekly. If we throw on our EMAs here, you can see, however, that on the EMAs basis, we're still operating on the 2 week, and that technically we're still above the 9 EMA on the weekly, and we are just a smidge under the 10 simple moving average, which again is that 26,500. Where is the 4? It's almost 27,000. So again, if we want to capture the bend in the 4, then we do have to be above 27,000. So on an EMA's basis, they're also telling us, get the heck above 26.5, get the heck above 27,000. And then you can see the 50 over here, it's a 27,250 now. So it's like rising actually, right? I mean, this threshold to be normalized on the chart is rising. Let's see. I think I covered that pretty well. Let's just go ahead and drop it down to the 1 hour. There's only like 13 minutes left. So let's see how this new zone that I made here is doing. And yep, okay. So we've already popped all the way across the momentum pool here at the start of the hour. We've just crossed to the other side of my momentum pool. So yeah, I mean, again, like the momentum pool is just doing what it's supposed to do. This is a little bit of a bullish orientation here. We already had an alpha 9 knockout to the downside. We have bounced back up. Okay. And so if we do flip on top of this pool above 26,442 and then take out 26,460, there is a chance for this thing to just continue to go. And that will get us above those Bollinger Bands up here. We could get embedded and then potentially keep going. So, yeah, I mean, we had a nice pump yesterday. I guess, let's see, that would have been probably this area over here. And then suddenly we had a pullback, which I was mentioning in yesterday's video that it was looking like the 6 hour, wanted to pull us back a bit. And so the hourly went first. And then the 6 hour kind of just drew us back in. I think, you know, we could get a mean reversion off of this. This itself is a mean reversion, but we could get a mean reversion off of a mean reversion. And maybe we do end up retesting this area somewhere around 26.5. And, again, flipping that would be better. But it is possible that we just kind of get rejected there and work our way back down. So I will be looking to see how much of this candle we can actually reclaim, the whole thing or just part of it. Sorry, my pet just jumped on the keyboard. Let's see here. Let's see the bottom of the pool is at 26,422. That's when we would lose our current momentum to the upside. And, we might end up retesting our volatility pivot at 26,350-ish, which if we lose that, the bearish control zone is 26,300. Guys, let's go ahead and jump over to the 6 hour. And on the 6 hour, well, we're doing pretty good things on the 6 hour here. So, that one's also closing in 10 minutes. And when we opened up, we were at our hold momentum, but we just pushed all the way through the momentum pool of the 6 hour when I made that one earlier today. And so, yeah, I mean, a very typical play for the alpha fam, driving down in momentum. We grab the hold momentum, and then we push through the add and lose. Then we can often find ourselves coming up to test the volatility pivot if it's overhead. Now we do have general continuation, kind of blocking us right there. But yeah, I mean, it's possible for us to come up to 26, 530, like I said, and then get potentially rejected. Getting accepted above that would be bullish, as you can see on the 6 hour. That would imply volatility would be at our back. Okay, so that would be pretty bullish. We could lose all of this if we do drop below 26,336. But again, yeah, this is a very narrow pool, so I'm not sure that's very easy to trade off of. But with the volatility pivot above our head, if we do come back and enter the pool here, okay, then for me, that's a shorting opportunity to kind of front run. And if we break the pool on the downside, then that would definitely be a shorting opportunity. So those would be kind of the this entry right here and this entry right here would be what I would be looking at to potentially come down and test the neutral point of control at 26, 135. However, right now, of course, it's doing its best to push up. Let's see. Let's go to the daily here. And on the daily, you can see that we've started rather bullishly in that we've captured half of this candle and we are above the 21 on the daily, which I like that. This ended up being a proper squeeze, and we did retest the bottom of the squeeze. I do believe that I was talking about that with you a couple episodes ago, where if we did hold that. Now, I did think that we were going to come down and kind of try to recapture some liquidity down here, and we haven't yet. So I'm a little bit skeptical. However, this isn't a terrible look, okay? Let's see if I can pull back out here. If I pull out, we do see that we are above the volatility pivot. And, when we essentially held the top of this momentum pool, that was a Longian opportunity. Uh, yeah, this is a little bit difficult because we were just going sideways in our candles, and these are very short candles. It's not like the same push up that we had previously. So, I really wouldn't say that I would want to be bearish here. I definitely wouldn't want to be bearish here. But if we do break back down into the pool below 26,333, 336, then I would say that there's a good chance that we retest the bottom of the pool somewhere at 25, 930, and then if we wick down or something and we end up pushing back up, then I would take that long at the bottom of the pool there to the other side and then potentially long it here. So what I'm thinking is that we do have a pullback, we grab this liquidity, and then we're going to have a longing opportunity on the day. Okay, and it could be today or it could be tomorrow. Not sure, but I don't have any reason to be bearish right now, but in terms of grabbing liquidity and then getting a push off the bottom of the pool while above the volatility pivot, I would take that long. Okay, yeah. So anyway, that's just my opinion. Let's see here. And I do like what it's doing. I do think, even if we have a pullback, again, we still have that support of the 300 EMA and the 200 EMA in this area. So I think we have a good chance of holding that area and then just pushing up if we do have a flash to the downside, which I was expecting yesterday, but maybe it just got delayed because This week is kind of weird. There's a trading holiday on Monday. Last Friday was a quadruple witching or a triple witching, and we just have a lot of things going on in the market. So I think perhaps over the next couple days, this will just renormalize a bit. Let's see, the neutral point of control is at 26,533, and that's where bulls will have a little bit more of an advantage. So as long as we're underneath there, I can't be too bullish on the day, and I just can't be bearish on the day either. And I just conceptually, I think we could have a pullback and then try again. Could be wrong, but that's the play I'd be looking for. The 2-day. I mean, it'd basically be the same thing, right? A little bit of liquidity down here, still above the volatility pivot. Got the 200 EMA ready to jump off of. So if we do, we've already crossed the pool. You can see we've already crossed the pool, so we don't really have to do it again. We could just do some type of chop and then break out, when the day is ready or the 6 hour. And then, as long as we're above 26,507, I would be open-minded to playing that to the upside. And if we do come back down, below 26,183, if we break back above it, I would be interested in taking that long to the upside, as long as we don't get embedded underneath 26,045, and as long as we're above 26,094, just to avoid any type of MACD traders who might be too bearish underneath there. But above that, the MACD is going to be positive. So, you'll also have the MACD traders on your side. Bearish control zone at 24.7, and then bullish control zone. You can see up here at 29, and flipping that 29, that could do exciting things for this chart. Take a look at the daily again. Where was it's a bullish control zone? 28.2. Yeah, so 28, 29 could get these charts could get very excited above 28 to 29. Okay, guys, let's go ahead and just take a look at the 3-day. 3-day has a very, very narrow momentum pool here, but we are kind of losing it. But we are above the volatility pivot, so I don't usually take that type of a trade to the downside if there's a volatility pivot underneath us, because any random volatility could just push us back up. And we are above the 9 and above the 4. I consider that bullish when we're above both of them there. And we could be setting up a squeeze on the 3-day. Something like this could happen, just kind of like a spike up, maybe tagging this 300 EMA, 200 EMA on the daily, and then we also have the Bollinger Bands up there. So we could just retest the Bollinger Band midline. And, if we flip that, then I'm going to get excited. Where's that at? That's at 27,300. So again, 27,000, very critical area. The 3-day is going to be in a nice position if we can get that, guys. Okay, I mean, we've done it before, but we have to hold on to it, right? Like, we can't just wick above and then come all the way back down in the next candle. We have to wick above, and then the next candle stops above it, right? Like, you just can't, the next candle can't just negate the whole thing. Let's see, let's do the 5-day. Sorry if I'm a bit slow in my voice today, guys. I just pretty tired. Had a long day. But you can see that on the 5-day, we do have the Bollinger Bands midline somewhere around 28,000. So again, what I was saying, we have to get above 28,000. You can't see the momentum pool for the 5-day is ending at 28,000 approximately, basically 27.9. And if we flip on top of that, we will be above the volatility pivot and above the momentum pool. And so that would be a very interesting trade up to 30,000. We're halfway there, guys. Okay, we're halfway there, and we are in a little kind of weird little squeeze on the 5-day between the 21 and the 4, and that does have the potential to pop up into this area, and I could see that continuing, and then we would break the 200, and then we could get that move to 30K that I've been promising you for quite some time. Now that's not necessarily true what's going to happen. I'm just saying that that's one way that's possible. Now the 5-day chart is a pretty long chart, so we could have to wait a couple 5-day candles, and that would be several weeks, right? So just understand, I'm not saying tomorrow, I'm just saying it's very possible. And at the very least, because we did break down and then we pushed back up into this pool, and we are above the neutral point of control, I would think that testing the volatility pivot somewhere around 27,000 is within reach. Now, we already did that technically in this last candle here the last wick on this candle. So could we get rejected and work our way back down and maybe try again? Or even just lose this thing and get down to the bearish control zone, which coincidentally is at 22,000 if we think about our head and shoulders up here where the measured move might bring us to that area, then I'm not sure, but this is very close to being a bullish engulfing candle above, again, above 26,500. So, the proof is right here on the 5-day that we need to be above 26,500, and to be above this 9 EMA, we have to be above 27,000 basically. So there's the volatility pivot as well. So 27,000 just keeps coming up over and over again. 26,500, 27,000, and then all of these stretch goals, right, where we want bullishness to come back to the chart is like starts around 28 to 29,000. So again, guys, you can see the Bollinger Band midline over here. Let me turn off the EMAs. Would be right there at the 28,000. So again, we're just embedding ourselves underneath it, okay, unless we get above 28,000. And if we embed ourselves underneath the Bollinger Bands, we could go for a crazy ride to the downside. I'd rather get back above the Bollinger Bands midline if you want to be bullish. Now let's go ahead and go over to the weekly, and the weekly is a new week now, so we can see that for the new week we are entering the momentum pool, and it does imply, okay, it does imply that we can get over 27,500-ish, maybe even 27,600-ish. This is what starting off the week like this implies. And so, we do have a little bit of resistance here because of this 200 SMA. And also the 4 is above our head, kind of blocking us right now, as is the Bollinger Band midline. We've just got 3 lines like right over our head. But the beautiful thing about that is if we flip them, that's going to turn into support. All 3 of those things at once. And that's going to be pretty strong, and could give us that pop up to 27,000 to almost 28,000, where we're still going to be underneath the volatility pivot. So it's not guaranteed that we're going to get up in that area. We could just get rejected right off of the top of the pool. And then you saw some of these other charts, we could get rejected below that as well because the week takes just too long to play out. But I think there's a good chance if we don't reverse this in the next couple days, there's a good chance that the rest of the week is going to carry us to 27,600-ish. But we'll see. We also have the potential for a Alpha 9 knockout coming up in a couple weeks, or maybe even soon, depending how high we push up. But probably a week or two. The 10 EMA and the 9 EMA and the 10 SMA have a chance to cross here. Now that's going to be a bullish cross, but as I mentioned, that's an alpha 9 knockout, which could just push us back to our lows. So just be careful. We could push up and then easily we could just get dropped, kicked back down, and then try again, maybe. We'll see. Or just get rejected. Let's go over the 2-week. And the 2-week is very interesting here because what we did on the 2-week is we basically, just a second here. Dang. Okay, I think this is the new one, but, well, it must be the new one because there's the hold momentum level, but I forgot to move it over. Sorry about that. As I mentioned, I'm a little bit tired today. There we go. Okay. Do so many of these charts, they start bleeding into each other. Just, your mind kind of starts forgetting what you just did. But essentially, you see our candle drop down here. We held our momentum at this level, and then we just started pushing up off of that. And so for me, that's a bullish consideration for the start of the next 2 weeks because we are above the neutral point of control. So even though we're not above the volatility pivot, bulls still have a slight advantage. It's just that volatility could push us back down at any time. So what does that mean? That means that bulls could have an advantage. They just work their way up, but random volatility just spikes us down at the volatility pivot. Okay, so 29,000 could get tested, and then this chart just dies, and it's a lower high, right? So sayonara, basically. All right. So that would be the risk. That's what I'm saying. Like if we don't get above 29,000, we still have a lot of risk on the chart, okay, of putting in like a lower high. So guys, yeah, but 2 weeks is a long time. So, I'd like to see a couple daily candles above there. Otherwise, it's very easy that we could drop back down to the bottom of this pool at the 25 300-ish, and that would initiate a 921 squeeze to the downside. That could be very dangerous. So yeah, I mean, I don't like the look of that. And what we can see here is that we did have an alpha 9 knockout, a reverse one right here. And so maybe that's what's going to push us back up. But in fact, this was a bearish construction, and so it's going to continue to the downside. And if I just had any warning, the 2-week looks okay, but we do have a precarious setup for where we are, and I don't want to see us dropping into the 2-week pool. So the top of that pool is at 26,336, which again just kind of emphasizes how important 26,500 is in terms of being secure. And let's see, where's 27,000 here? Yeah, and 27,000 would get us above the 4 EMA, so that would be brilliant, guys. Okay, and then we just have to contend with the volatility pivot at 29. So the 2-week is actually giving us a setup to get to 29,000, at least 28 to 29,000 potentially. Okay, and there's definitely room to get up to that $27,000 area. But we do have the 35 EMA, the 4 EMA, the 10 SMA, over our heads right now. So that's a lot of resistance to work with. It could be a grind. It could take a couple weeks, assuming that we just don't burst through it. But just letting you know. The other charts may decide to just kind of do some pullbacks and liquidity grabs, and then allow this thing to go maybe. And essentially what that would do if we do pop up to 29,000 is, as we were dropping here, a lot of people put in stop losses above these candles, right? And that would just allow market makers to kind of grab a couple, a couple of these stop losses before pushing the chart down. So that's kind of the bearish perspective. But, would they leave all this up here? I don't know. So maybe we could push up to that kind of 32, whatever. And again, like it's just a question of, do we build up too much bullishness if they want to bring us down, or what? Have to pay attention to that later on. Guys, I am totally exhausted today, and I'm almost like falling asleep at my keyboard. And maybe my voice is putting you to sleep also, so I think I'm going to end it there. But we did get through most of those time frames, and the only one really left is the monthly. So I think we can just show that really quick. And for the monthly, you can see that we are just challenging the top of the momentum pool there. Of course, we've had this one marked out for quite some time since it is a month-long chart. But look, we have basically broken down. Sorry, we're testing the bottom of it. We were breaking down. We had our hold momentum, and look, we've come all the way across to the momentum pool's bottom here after wicking down to the general continuation. So again, just proving these lines are so accurate. Okay, so we would have been over here when I marked this line and this line and this line, and yet look, we fell and we perfectly tagged this line with this wick, okay, on the monthly candle here. And then we came back up, right? And we're just testing both of these hold momentum and add momentum levels. So yeah, I mean, it's interesting. I don't like the fact that we're underneath the add and lose momentum, underneath 26,500. That does suggest that we could work our way back down. You can see that we're starting to get into a possible little squeeze scenario with the 4 and the 9 here. So we just have to be very careful how much we dip on this monthly chart, but we have plenty of time to fix it if we do, but just got to be careful. And, but we're still above the 9 on the monthly, so technically nothing too bearish, not yet. As you can see, the 10 SMA is still swooping up and supportive. So the 9 and the 10 are kind of acting together as kind of like this spoon that's just lifting us up here. And, unless we lose both of them, can't be too overly concerned, especially with the volatility pivot at our back. Yeah, there's the chance that we could lose this and then lose the general continuation and come all the way down to this kind of 18,000. And it would suck. But then we would basically clear this. Probably all the other volatility pivots would just come, crashing down as well. And so any bounce that we got off of here would probably put us above all of the volatility pivots, and then we could go on an epic run. So, I just would want to hold above 18,000 for sure, okay? And preferably above 20,000. But strongly preferably above 23,000. Okay, guys. Yeah, but this is a very strange structure going on here. You can see all of these lines are kind of, all of these lines are just kind of consolidating into this one little area here where they used to be spread out. Okay, they're coming from all different directions. They're just coming right here. They're all pointed just right there. It's just unusual to see them kind of round into the orientation that they're doing. You can see them all flailing over here. It's very interesting that they're all just kind of consolidating in this one area. That does suggest to me that this is an extremely, extremely, extremely volatile setup that can just punch us to the sky or punch us to the floor on the monthly even. So gonna have to watch out for this. We're gonna either flip everything to the upside or we're gonna flip everything to the downside like at once. That's that could just skyrocket things or it could just massively dump things. We do have the 3-month and the 6-month volatility pivots up here in the 40,000s and the 50,000s. So again, I don't rule out us popping up into those areas, just like I don't rule us out popping down to 18K-ish and retesting our macro lows here, because very frequently the volatility pivots do get tested. Okay. All right, guys, those are alpha for the day. Stay safe and happy trading.